Today on Stock Portfolio Analysis, we will be looking at the Simplify Volatility Premium ETF, ticker symbol SVOL. This ETF seeks to provide investment results, before fees and expenses, that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index Short-Term Futures Index, while also seeking to mitigate extreme volatility. With bond yields near all-time lows, after 40 years of falling interest rates, attractive sources of income are sometimes hard to come by, and many traditional sources of income are failing to meet investor needs in this current environment. The Simplify Volatility Premium ETF aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income-producing asset classes. So how does it work? SVOL starts by investing in a short volatility strategy designed to generate substantial income while minimizing volatility drag. It then spends a modest budget on VIX call options that seek to protect the short volatility portfolio when the VIX spikes. According to the fund's management, SVOL is the first ever VIX income strategy with option hedging. Let's take a look at the performance of SVOL against the Nasdaq 100 and Standard & Poor's 500 indexes. SVOL is currently outperforming both the Nasdaq 100 and S&P 500 with less volatility. From May 13, 2021 to December 8, 2022, SVOL has achieved a 3.74% compound annual growth rate, while both the Nasdaq and S&P 500 are currently in the red. Next, let's look at how SVOL has performed relative to the Schwab US Dividend Equity ETF and the JP Morgan Equity Premium Income ETF. All three of these dividend-focused ETFs have performed well in the current market, with JP having a slight edge overall. But let's look at what is the true strength of the Simplify Volatility Premium ETF. Over the time period of this test, SVOL has paid out $1,999.21 in dividend payments, versus $1,561.76 for JP, and $479.87 for SCHD. The managers of the Simplify Volatility Premium ETF have stated they aim to achieve a distribution yield of somewhere between 15 to 20% annually, with the current yield sitting at 16.92%. Based on the current performance so far, the Simplify Volatility Premium ETF would most certainly be worthy of consideration if income is a priority in your investment portfolio. With its monthly distribution schedule and outstanding yield, SVOL could possibly be one of the best dividend-focused investments available.